So every day I get in. If I get in, and if I didn't, I didn't trade a session or one of my time windows, I come to the charts and I just check it out and see what happened. Right away, first thing I do is I come and I mark up the chart. I mean, it's all past tense, but you want to keep repeating, seeing the pattern over and over and over again. So I come in and I go right to 130. Okay, so I look at the highest high, 130 appears to be this candle here. The lowest low. Right, okay, good. So you don't count 2 o'clock. Like, you don't, this is what I don't do that. The thing, the window is 1:30 to 2 o'clock. This candle opened at 2 right there. Okay, so you don't, down here, this, remember, 2 o'clock is the open. It opened here. Anything after that, it's not too, you're saying 1:32 to 2 in 15 seconds or something. That's not what Michael teaches. When you using those, like, so 1:30, I was told that 1:30 acts like 9:30. So like 1:30 to 2, you would treat that like a new opening range. And so anyway, so that's here and here. And so yeah, this is the highest high, lowest low, and you mark that out. And I love this. This is the 1.5. It came to the 1.5. We also hit here. This is a new day opening gap. What day is it? It's new day opening gap 6:10. That's today's new day opening gap. Wow, 6:10. So that's beautiful algorithmic movements. You also see it ran into 9:30. Look right here. So it spiked down. So this is manipulation that can occur. So so you can see how this was lovely. This was like textbook beautiful, very beautiful. Even the structure here is not, it's a structure that can still be taken out higher. So see, it ran down, and it's just all this data, all this information is here. So yeah, it's really good. So anyway, so again, you waiting for, once it does this movement, you can do a 1 minute market structure shift. So it's a low, high, higher, low. For me, what I do is, and Hunter can say, I'm not, everybody, look, I'm not profitable yet. I have psychological things that keep messing me up. So I'm speaking as though, and my confidence is built up a whole lot, right? So, but I still have some cobwebs in the psychological sector that I'm dealing with. But in any event, I'm the reason why I'm not. I see this stuff. I tell people stuff. I watch people make money and me not. So whatever blessings y'all can get from me, great. And Hunter's profitable. So for the most part, listen to what he say, and his critique, his if he like corrects me on things, whatever, take it, and I take it too, Hunter. If you check this out. So anyway, you have a low, high, higher low. That makes this green a mitigation block, and I take it once the body is closed above. That's it. I then drop to the 15 second. So let me just do that real quick, just to hey, let's just follow all the way through with giving an example. Now remember, I'm dropping this here. That's one candle over, so that I know that on the 15 second, the candle to the left of it is the closure. You want to see when you would have been activating like your move, like looking to see, looking for your thing. So now I drop over to the 15-second, which is over here. I'm going to come here. I'm going to go to the 10th, and I'm going to go to 13:30. Go. Alright, so here we go. And that's right here. So remember, it's this candle here, this candle here closed, and creating that, you know, that like activating. And as you see here, even on the 15-second, this candle here closed above the bodies here. And now I'm waiting for 15 seconds to pull back into a fair value gap. There is one here. It's a little tiny one here, so I could have got in when price came down to that, or I could have waited for price to for me, I noticed that, and Michael mentioned it too, that if you have you know, a low, high, higher low, but and you have a fair value gap on that second leg, there's a chance that price can come down deeper into that area. It didn't actually make it so well, but you can also do a from this swing here to here. You can do an optimal trade entry, which was about here. So you can choose that. If you see another fair value, which I do, I see it here. I would, for me, I got used to just letting it come down a little more, because also there's more time. See, 209, 210 to me is like, hey, that's the macro is ending, and now it can start to do its thing. And so the macro came in here. It's the macro here. The accumulation, manipulation, and then distribution. You know, and moving along. So right here is where I would have, because there was still time for 10 o'clock to happen. So 10 o'clock happened, dropped down, and right here is where I would have got in at. At the strike of it. And my again, I have like an automatic 20, but I would have probably bring it down a little more. Oh yeah, this is here. And that quarter, again, another quarter, and the 930. So I would have been okay with putting it right. And oh yeah, also the new day. Remember, this tapped the new day opening gap for this day. So I would have been okay with coming about here. And that would have been 16 handles there for a stop loss of 16, and slide it over. And I don't need to say the 25 was made, even if you waited for these highs here. You would have waited for the highs. There you go. But the highs are there. So that's that. Sorry for so long later. Oh, wait a minute, I forgot to mark out. Let me just do this. Let me see real quick. 1 minute. Okay. I always mark out the first presentation after 1:30. So I don't recall if Michael officially said every 30 minutes there's a first presentation or whatever, but I just do that, especially in this instance where a number of students have said that it is that you treat 1:30 like 9:30. I don't think Michael said it, but if he did, great. But anyway, so from 1:30, which is here, looking for a first presentation. No, that's not one. Right here. The first presentation appears to be here. So I always throw this out as well. And that would be another point, as Hunter mentioned, that's another point that we would use as a reference. Look at this. Beautiful. I don't extend the minor. I call them like minor first presentations. I don't extend them all the way out like forever, but the 9:30 I do, and I believe it's 12 to 12:30 a.m. I do as well. And just label it. And I put well, I don't even put the time because it is. Okay, and so yeah, you could target, because we all know price likes when the first presentation is created. If you ever go look at the charts over and over and over, you can look at all of the first presentations, you will see a lot of times, you know, high percentage of time where price will, when it's created, price may dibble dabble and leave it, but it will soon leave it within a few candles. It'll leave it and it come back and touch it and then go. Even if it's gonna go down or up, whichever way it's gonna, it gets tapped again in some sort of way. And in this instance, it got tapped and then it broke through and then came that way. So this is like that that snake or S symbol, dead smack right here. Some people call them like a Z point or whatever, something. But anyway, that's that. And then we saw how Hunter was just, you know, adding on. If you have a higher time frame, which you do, so this came all the way to 1.5. This came all the way to 1.5, and what I do also is I drop a fib going the other way, a deviation fib going the other direction, and oftentimes, again, you can target. This high is right near 1.5, but then 4 is a completion type place, and we almost got to 4 here, and that's it for the day. Yeah, got up to 3.5 with the bodies, but 2.5 and 4s are really great spots, and 1.5. 1 microsecond in 0.25. But again, as I mentioned, you choose how deep you want to take the risk. Like if you want a shallow dig, if you feel like you want to go for that, all right, go ahead. Me, I don't like going for 25 unless there's heavy PD arrays to the left that I'm working from. And this here, this Cibi is more like, this balanced price range here. The top of it was where I would have been more. You can see it. See the 1.5? So close to the beginning of this here. So this balanced price range here. And again, you can continue to move down, the higher time frame things, and look at that. These things get respected all the time. And you're looking at the time that it's happening at. You gotta always focus on the time that the event's happening at. So this was the 50, 50 to 10. This is the macro did a start run, and ran down into here, took the lows here and here, and ran into this balanced price range, and then ran up. Higher time frame, this is a tighter balanced price range. Alright, I think I did everything. And again, you go to a higher time frame, you don't just stick on like go to the 5 like where he was, and you can see higher targets if you want. So this, let me see, did it cross over here? Yeah, 12 midnight, I believe. Yeah, 12. Yeah. So I personally was targeting, I felt that price would get back to 12, because as you see, this would have been a almost, there's a little nub here, but you can, I bet on the 1 hour or something like that, this is a devil's mark, because price opened and then just went straight down. So on a higher time frame, this is a devil's mark, and so it got close to it, didn't touch it, came all the way back down, and then did this move, I'm expecting it to still get to there, so that could have been a target for me there. And of course, I'm expecting it to go a bit above, so that there would have even been nice. But yeah, you saw Hunter just stacking them on at these areas. Remember, Hunter said in mentioning how, and Michael was too, about how, you know, once it starts to run and do its spooling and doing its movements, then everything gets respected. All of the steps, this stop run happened, market structure shift, and that's starting to go, and now everything it has its orders and it's going. Every order block, you know, bullish order block you see, bang, it's being respected. Fair value gap respected, bang, come up, has a little consolidation here, but still all these 3 down closes, even after it came above and above the open, which validates it, activates it as one, came down, still respected it, ran up, you know, until it gets to where it's gonna go. Some people take the manipulation leg, that would be this here, and go from low to high, and look at the projections on that, and then you see that I'm using my hands right now to measure here and here, and we see that from measuring from this low to this high, 2.5 is one standard deviation from this manipulation leg. So that's a target there, and you can see how the macro then starts to now just hang out here like the job is done. So now you're seeing you know, some, you know, disrespectings that are happening, you know, you're seeing it's now happening because now it's like the orders are done, completed. You know, the algorithmic move happened, and now it's, you know, the end of the day, and it's just chilling out now. So that's it. Later. Sorry so long.